Okay guys, back again. It's been a little while. I know I said I was going to do part 3 of that back test, where we were testing my strategy, the strategy where I hedge positions, and I actually started it twice. Both times there was an issue with the mic or there was an issue with something, so the third time I actually only got to, I think it was about the 19th of October, and then I had to go somewhere, but I ended up just calling it there because it was working, you know. I think once you get to a point where, at that point I was over 50,000 and I was only risking 2 lots. So I ended up on, I think it was 99,850 or something like that, 19th of October. So when we finished the last video, I think it was on 72,000, and that was the end of August. So September and a little bit of October, we basically took it up almost 30 grand. So I'm happy with the strategy. The only thing that I struggle a little bit with is now that I've been in the live market, i.e. over here, because if you guys remember, I was in this USD CHF trade and I'm still in this trade. This is almost 2 weeks now. I maybe was in and out of positions a little bit too soon, which meant I kind of had to stay in them. There was a few times where I could have been a little bit more patient, and that's the key, is, you know, just trying to be more patient, because at the end of the day, this is a 15-minute candle, and when you're back testing, you just click 15 minutes, you know, 15 minutes are going like so quickly, so it's a lot easier to sit there and, you know, wait for a candle when it's in a second. So I'm happy with the strategy. I think it's just patience, which got me thinking, you know, there's going to be times like this where there's 2 weeks, and it's not that I've not closed any profit, because I have, because when we were last here, I think it was on 7,200. We're now on 9,600. There is still some drawdown, but closed profit is 9,600. So I've still made $1,400 since the last video. Even though I'm still in it, I'm constantly closing profit. Now I'm basically going to play it very, very patiently, because, you know, all of this, literally this, between these two here, it's stayed like that for ages. It's just been in this range. Don't worry, these are not candles. It always freaks me out. It's something to do with this indicator I use. It's super annoying, but eventually they disappear again. I'm not too sure what that means, but there's been a few times when I've been like, oh my god, what is priced up? But it's not priced. Anyway, 1 second. Excuse me. I know. The wife brought me some water. That's the glass she used. What are you gonna do? Anyway, so it got me thinking, and I know you guys are probably like so fed up of me changing. The fact is, I'm not changing strategies. I'm tweaking. I'm constantly tweaking strategies, because at the end of the day, I'm not going to go back to my live account until I am completely confident with the strategy I'm using. The EMA was extremely good, provided there were no really big moves like there was in July this year, where there was that move and it just kept going down. And again, I think in February this year, February or March, with the whole Ukraine, when that all kicked off, that's when, so you can go from making to losing everything just like that. And that's why I stepped away from it. So it got me thinking, why not make the money, and when you get into a position when you are like maybe 10 positions deep in the EMA strategy, then we switch over to the hedging strategy, the one I've been doing now, because then it's kind of the best of both. You're making money. When you get into trouble, you have an out. You basically, at that point, you use the hedging just to manage your way out. That's the only reason the hedging will come into play, is to manage. So that's what I want to test quickly. So I'm going to go back to, I double checked on the chart, it was the 5th of July. So let's do that now. And I can go through this with you guys. Here we go. I've got it ready to go. $5,000 account. We're ready to go. 5th of July. That's when it all kind of kicked off. So this is where I'm going to start. Let's see if we can get ourselves into trouble and then get ourselves out. Okay. And the key thing is, guys, the hedging part of the strategy is not going to be the money maker. In the strategy on its own, it was making money. The hedging is going to be more for managing our way out of trouble. We can still take a bit of profit with it, but it's more going to be about management, okay? And I think that is the key. That's really important that we kind of just make sure we understand that from the get-go. So this is kind of the best of both, because I always traded the EMA hoping and praying we never got into that situation where there was just a move in one direction that never turned around, because the EMA can't get out of that, and eventually you've got to pull the plug. And when you pull the plug, it's sometimes 50% of your account, depending on what way you call it. You know, 50%, that's a big chunk. You can make 30% over 3 months, and in a matter of a week you can lose 50%, and you're losing 50% of the new total. So that was the only place that I was like, the strategy is just, it's, you know, it gets stressful in those times. But this way we can manage our way out. So let's see how this goes. I'm going to start with 0.1 for a $5,000 account. Let's see, is that too high? Should it be 0.05? I don't know. Let's see. Start with 0.1. And we're only going to go 10 positions deep with the EMA strategy, and then we will go into our hedging, okay? Our management. So let me open a couple new charts. I'm going to open the 15 minute. 15 minute will be when we need to hedge, and then the hour is just to move along to, you know, the times that we wouldn't be trading anyway. So for example, let's go to the hour chart now. Okay, so we just move along to like 7 a.m, which is when I'd probably start trading. Then we go to the 1 minute, because we are doing the EMA. Remember, we're starting EMA. Templates, EMA. All right, there we go. Let's see. Where does it all start? Is this it already? Push down. No, not yet. Okay, let's take a buy there. Take another buy. Oh, hold on. It's a bit laggy at the moment. What's going on? Okay, I can close all there. Not a huge profit, but small amounts very often. That's what makes the EMA good, right? You can make your 1% easily in a day. Pushing up. Oh, here we go. This is where it starts. Okay, so push down. I'll wait for the next one. Okay, now we're going to start taking our buys. Take a buy. Take a buy. Take a buy. So 10 buys, and then we're going to hedge. Buy. Probably would have taken a buy there. 1, 2, 3, 4, 5, 6 positions. Okay, I would have taken a buy in this position for sure. Buy. That's 7 now, I think. If we break that low, I'll take a new buy. Here we go, buy. So we are now 1, 2, 3, 4, 5, 6, 7, 8. 8 positions. Right, that's 9. Okay, one more position and then we're hedging. Oh, hold on a minute. Let's just have a look here. Probably would have already done it. And this push down over here. There. Taking a buy there. And now we are going to switch over to the 15-minute because now we're going to go into hedge mode. Okay, so that's how far we have pushed down. Currently sitting at 700 under, so what is that? Sure, little, maybe two, not quite 2%, 1.5%. No, that's 10%, I think. Sorry, never mind. Close to 15%. Is that right? I can't even think right now. Anyway, let's just keep going. So now what we're going to do is we're going to place our area. So this will be 300. So the next one will be 2.5. Okay, so now let's open up our trades as well. So now we basically are in management mode, guys. We are now in management mode. Now we are going to start kind of holding back the loss, okay? We don't want to lose any more than this, but we're not going to lose that. We're actually going to now start managing our way back. So we have 10 positions open. This is, I'm going to close this. I'm going to close this, and I now want this to, if this comes back down to there, I can actually close this one as well. I'm going to close this one position because we're in profit. So again, now we're in management, remember guys. So, and I'm going to open up a sell for 1, 2, 3, 4, 5, 6, 7, 8, 0.8. Okay, so that's it. Now all we need to do is just, if our sell is in profit of more than the top two together with a bit of profit, we're good to close, okay? Or we're coming back all the way up to the top. So let's go. Right, what are we at now? 300. So I'd like to close the top 3 positions. So I'm waiting until price comes all the way down. Okay, prices come all the way down now. Let's just get our next line. So essentially now we can cross out 2, 4, 6, the top 3 positions easily with still making profit, right? So look at our balance. Our balance is 502. This is what we look at just to see what we've closed. The equity is what we keep our eye on, okay? At this point, we want to make sure that we get back to 520 minimum. We can start closing anywhere from 520 because then we're just kind of closing without moving backwards and we start again, okay? Right, so now we are going to basically, so now the point is we are locked in place. Now it doesn't matter what price does, we're locked in place. This is where we start managing. 1.5. Okay, so I want price to come back up. So either price is going to just come back up and then I'm going to close the sell and the top 3 buys. If this pushes further down, even better. We're getting a bit of a range going now. Price pushes above, we are going to close those sells. Okay, there we go. So we've pushed above. Our sell is worth 600, 2, 4, 6. So we can close all 3 positions. Maybe let's do 2. Let's do 2 because then we still get a nice little bit of profit. We're only going to close 2. If we had 10 positions open, I would want to do 3, but we are fine at the moment. We'll do 2. Now look, our profit is 282. We've made $200 profit with that. Now we go back to opening a new buy. We open a buy and we go. As soon as we break back down. Okay, there we go, hold on. Break below. Okay, it's paused a bit. Okay, we break below and we have 1, 2, 3, 4, 5, 6, 7 positions. That's correct. So we go 7 and we now will sell that. And again, we are locked in place. Now we are in control. The second we add in our hedged positions, we are in control. We decide when we open and close, right? This loss will not change at this point. We are now in charge. Okay, so I'd like it to come down to there. Once it comes down to there, I'm going to see, can we close that and the top position and still take some profit? So we basically are just keeping everything close together and slowly trying to manage our way up, closing positions, closing positions, closing positions, because the less positions we have, the easier it is to manage. And that's the idea. Just close your way out of it. As you go down, try and close the top positions while not taking loss. That's the key. Okay, so let's play this forward. Okay, so at that point we are sitting at 238. So we could potentially close that, but I'm not happy with that. I will now basically like to see it to go to the next, which is 101. So I am only now happy to do anything when it gets to that line over there. And this is what I'm talking about. I'm in control now. I'm not going to do anything until price does what I want. I am in charge, not price. And this is the key. You are taking control over what's happening, not just hoping and praying price does this. No, you are saying, I will only do this when price gets there, or I'll only do this when price gets there. So I will only add a new position when price gets to there and close out the top ones. Potentially the top 2. I think at that point I'll be able to close the top 2. If price pushes back up, I will only be interested once price gets all the way up here when I'm in some nice profit with the buys. Okay, right, so let's play this forward. Let's see. So now I don't care what price does. Oh, there we go. I only care when price gets to the area that I am interested in. Okay, so let's have a look. 5, 4, 8. So with these 2 positions, we can now potentially close these 2 positions or close one and take some more profit. So if you want to keep taking more profit off the table, then only close one. Remember, we only have 7 on the table at the moment, so that's fine. We can close out this one. Close this out, close that buy, and then now we are going to go back to a 0.1 and we're going to buy there. Okay, so now we still have the, oh, hold on, that's a 0. We want 0.1. Okay, so let's see, did we open our new buy there? 1, 2, 3, 4, 5, 6. No, okay, so we're gonna, that's where the buy goes, 0.01. And now I will only open a sell if it goes below the my line there, 1.01. So let's see what happens. Let's see where price goes. Okay, it looks like it is going to probably break down. Okay, so at that point right over there, I will take a sell again for 0.7. Sell, and let's get our next line in place over here. It'll be 1.00. And I will now only be interested if we go to, oh hold on, that was way too much. We need a 1.05. Okay, So I'll only be interested now. Again, I've placed my hedging position and I am in control. Look at my balance. I've already closed, secured $541 in profit just with managing, right? So that's constantly building up my the amount of money that I can play with now. Yes, my equity is currently at 4,000, so I'm sitting at 1,400 thingy, but according to my starting balance, I'm only just about 1,000 under, which is okay. It's manageable. Okay, so let's go. Okay, so let's see if price gets to there. We're now sitting at 600. I can close 1 and 1. So I can play this a little bit more aggressively because I think price is pushing down. And why would price? I think price is going to test this area. So I think we play this a little bit more aggressively and we put in our 9.5. And we say we will not be interested until price gets to there. 9.5. Okay. I'm not going to be interested until price gets to there because then I can potentially close 2 positions, 2 of the top positions. So that's what I'm going to do. I'm going to leave it, and it's either going to get to there or it's going to get all the way up there. Anything between, I don't care. And the thing is, guys, this might take 2-3 weeks before you're actually even out of a trade. And I know it seems like, you know, that's too much work. That's why would you do that? And you're not sitting and trading. You know, you're basically setting alerts. The second it hits that mark where you set either price goes here or there, it's going to take some time. Set your alert, walk away. The alert hits, you come into the market and you look, and that's when you trade. So you're only trading when your areas are hit. So I'm now looking for this area where we're now 603. So either price is going to get to there or it's going to get all the way up there, and then I'm going to switch it around and I will start looking for a sell. Okay, so let's go. And I want to try to get that sell smaller and smaller. So I actually would like to close out more of these positions because then my sell will be smaller. Okay, that's the key as well. So let's see if this goes down. So I'm not interested until price gets down to that bottom line. Remember, I'm in control now. I'm in charge of this. Okay, there we go. Hold on. Will it come back? I just want to see. Probably not. So that's where I'm interested. Is exactly what I said. Price went down, tapped there, pushed back up. So now I have 800. 3, 4, 5, 6, 7. It's 800 between the two of those. It's 828. So not quite there. Needs to go further down. So I made that call, and I knew making that call I might just still be sitting in the market for a long time. I could have at that point closed the bottom one and only one at the top. That could have been another way I play it. So now what we're looking at, guys, we've got to pause this, see where price is, and we've got to look at these. Okay, between these, no. So we want to get to a point where we've only got maybe the top 2 in negative and everything else in positive. Until we have that, I'm not interested. So it needs to be up here somewhere, all the way up here. And what we could do is, this is 103, so I can actually add these in to get to the 1035. Get these in because I'll need those lines once it gets there to make my call on when I'm 3.5. Okay, over there, and then it'll be 4. Right over there. So I will only close, I think, probably when it gets anywhere in between these two. Okay, that's what I'll be looking at. Or to the bottom here. And like I said, sometimes you're just going to be in the market. But again, like I said, I would rather wait 2 or 3 weeks and get out with no loss or some profit than be impatient and carry on trading the other way without this hedging, without this management, and potentially blow my account. I'd rather have that 1 month where I'm just managing the whole month to get out of its sticky situation, but I never lose. If you never lose, if you never go backwards, trust me, when you do move forward, it's going to be incredible. Because if you are moving forward, always moving 3 steps forward and then going 4 steps back, you could go 2 years of trading and be in the same place. With this, you might think, oh my God, I've been in this trade for a month and I've got what, like a few $100s for it. The point is, you are never ever moving back. Sometimes you're stalled, but you don't move backwards. And that's the key. That is the most important thing, guys. Never moving backwards. So now I just wait for price to get to where I want it to. I'm a patient man. I will wait. I will wait till price gets to where I want it to be. I'm not going to get price to, get me to trade when I'm not ready to trade. I'm only going to trade when I'm ready. So, a month could go by. That's fine. All right, now we're talking. Whoa, 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 whoa. Okay, so let's just go back to when it hit up there. Okay, at that point, and we had that big tail to the top side, we were looking at 300 and call it 380, 400, well, 430-ish, 430, way higher. So I could close there, but yeah, you know what? I'm going to do it. I'm going to close. I'm going to close all of these out. Close that one. So I've got to close all of these, and then I'm going into a sell. Alright, so I've closed all of those, and now I am basically going to be opening a new sell. And if we push back up higher now, if we push back up, I will be opening a buy, and then we basically are flipping it with bigger lot sizes. So this is why you've got to be sure when you do take this sell that you've done it at the right time. Okay, so let's see. $5,020. Anything over that, I'm happy with closing. Okay, we did push up, but I'm looking at that being broken. If that's broken, that's when I'm going in, right? So come on. Okay, right now, as it stands, right over there, we are still way in profit from where we started. So I could close there, right? And this is where you make the call. You make the call. Do I think price will go? For me, in a live account, I would close there. So even though it's taken me, what are we on? 14th of the 8th. So it's basically taken 8 plus 14, about 20, let's call it 20 trading days. 20 trading days to get to this point, and we are $335 in profit. I would rather end $335 in profit. I've never moved back. I've not gone backwards, and then push again. And remember, this was a move that would very easily, if I was just trading my EMA, taken up easily 50% of my account, right? So would you rather have traded for 2 weeks, made maybe $500, right? $500 on your account, or which is 10%, that's 5% a week, traded 2 weeks, made $500, and in the third week lose 50%, which means you are back all the way down to like $2,500. Would you rather, after 3 weeks, have your balance at $2,500 or $5,335? I mean, I know which one I would choose, because you could have gone 3 weeks winning, and had 1 week that was that big push down that had never turned around, and eventually you had to pull the plug at about 40 or 50% of your account, and then you're sitting with that loss where you are going to struggle recovering, because all of a sudden you're dropping your lot size. Your lot size is smaller, so it's going to take you so much longer to even get back to the 5,000. And this is why never go below the point you start. That is the key. If you can never ever go below the point you start. So now I'm considering, once I close these all out, this is where I start. So now my starting is 53335. I will never go below that. And I'm not talking about equity, because equity will go below that because I'm holding. So I'm looking at balance now, because balance is my starting point, and then I'm looking at equity when I'm holding. But it's still, I'm looking at balance because I'm looking at what I've currently closed, because whatever I've closed, I'm using that to hold my equity, to hold my drawdown. And that right there is exactly how you would get out of a trade. Okay, so I would now close all. You think you're closing with a loss of 548? Yes. Like I said, you could play it now. You could play it now a little bit more aggressive and say, okay, I'm going to see if we get back down to test this low right here. Let's see. Okay. Bearing in mind, I would have closed it. If this was a live account, I would have closed, but just to see how it would go if we're playing it a little more aggressive. I've got to understand that if I play it more aggressive and it pushes up, I have to be willing to continue this trade and potentially now get into the reverse at a higher lot size. If I'm prepared for that, then let's go. So let's go forward. I'm looking for that little bit more of a push down. A little bit more. I wanted to break that bottom. Right over there. I've broken that. That's all I was looking for. I've now suddenly secured an extra $300, right? If you want to be super aggro, you can push it for the next, like just at the top of these. So let's see. I'm going to play that. Oh, wow. Okay, there we go. So I'm going to leave it for that push down over there, because I'm not going to be that aggressive. That push down over there, close all, done. So just like that, I've secured $926. Suddenly, you can play it more aggressive. Like I said, in a real account, a live account, I probably would have closed on the, what is it, about $300. So that's basically the strategy, guys. That is what I'm looking at. That is kind of the best of both. I think that is the best of my EMA strategy. So it's using the EMA when it's good, and it's switching over to the other strategy when the EMA is struggling. For management only. The hedging becomes a management tool only. I'm not using that to get big profits. It's only to manage my trades when I'm in trouble. And I think the combination of these two, I think potentially could go very well. Anyway, that's where I'm going to leave it, guys. I don't want this to be too long of a video. I'm going to leave it there, and I am going to basically backtest the whole of 2022, starting from January, starting on a $2,700 account as if it were live. That's what I would be starting on. And I'm going to go through the whole year. It's going to take a hell of a long time. I'm just going to do it in stages. And I'm going to see where... Actually, maybe I'll start with 5,000, just because that's what I started the hedging strategy with, 5,000. And I think in mid-October, I got to 100. So let's see how this one does. All right, so anyway, guys, I'll update you on that full backtest of a year using the best of both. I think I'm going to call this, maybe I should call it the Hovis strategy, the best of both. What do you guys think? Anyway, I'm going to leave it there, guys. We will catch you in the next video. Thanks for sticking around if you're still here. Yeah, bye for now.